Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the FX Rundown. Somewhat of a tired, quiet range in the dollar index at the March contract highs. We had retail sales this morning whiffed. PPI missed. Weekly jobless claims, third week in a row missed. The dollar couldn't sell off. You started to see a little bit of pressure in the dollar index, but really kind of battled back on trade headlines. As headlines were not so supportive of a U.S. and China trade deal, the dollar got a little bit of a safe haven win back up. However, at the same time, you had Fed Governor Brainerd talking more dovishly, and still the dollar couldn't battle down. It is not finishing the session on the highs, but again, a quiet range. Really, this is a lot to do with European weakness, too. If there was just any bit of good data coming out of Europe, you'd see the euro a penny higher today. It's battling right above 113. We have a minor support level just below 113. You have those December contract lows below there, so you got to be careful with that. But ultimately, it seems to be making a little bit of construction. We go into tomorrow, not a jam-packed calendar. We have CPI out of Spain, but really the pressure is going to come out of the United States. You have the first look at February Michigan consumer data. This is the freshest data point every single month. You also have some industrial production, manufacturing production, and New York Empire State manufacturing. So a lot of this is going to play into the dollar and what it does. But the euro down here 113, there's a lot of value down here. We think if you buy here, you're going to be happy down the road. But immediate term, again, it's going to depend on the data tomorrow. Now for the yen, you're seeing some of these safe haven assets really work higher today. The yen just digging out of the hole on the week is a win almost, but we got to get some momentum to finish out the week. 91 is going to be that mark. We want to see 91 get achieved. It's almost there. We're talking about 30, 40 ticks at most to get there from today's settlement. The gold bounced off the lows. Gold was trading lower overnight, 1304. Came all the way back here, 1315, right at our big pivot level. The Treasury market, 30 years, up over a whole point today after the retail sales did come off a little bit as the equity market recovered. But safe havens were showing light, and that's good for the yen. But again, the dollar has to weaken really to get the yen going. We like the yen long term. It's one of our more favorite ones out there in the longer term. But in the immediate term, you got that uncertainty, especially with the equity market. As equities rally, it's going to deflate the yen. So stay nimble there. But at least 91 we should see, and that would be a win. We want to see it close just above that 382 retracement from those 92 swing highs. Now, lastly, the commodity currencies, the Canadian lower. The one thing that's been really hitting the Canadian over the past really 18 months is the data. It's been inconsistent. You get one really good data piece like jobs last week, then you get bad data, manufacturing sales today. The Canadian can't seem to really find ground and hold it with the inconsistent data. Now you have major three-star support below. You have some strong resistance that have failed to get out above yesterday. We like the Canadian. It's been very constructive technically, but again, it's another one that's going to rely on the dollar. On a positive note though, you got crude oil grinding higher back above 54 today. That's keeping the Canadian up. And then lastly, the Aussie dollar. We do have inflation data coming out of China tonight. It's going to be key just really for overall the risk environment. And then last night too, you had a better than expected trade balance read. Stronger imports and exports out of China. That all helped the Aussie dollar, helped broader risk sentiment too. The equity markets were higher ahead of that retail sales number, and before that deflated it. But the Aussie holding well, got strong support below the market, just hasn't came off of that at all. But again, it's another one that's going to rely tomorrow as things round out. What do we get in the U.S. data, and what do we hear on U.S. and China trade ahead of the weekend? And does that can officially get kicked down the road for another 60 days? Give us a call. We're here to talk about anything on the board. 312-278-0500. You can email us at info@bluelinefutures.com. Check our website for updates, and you can sign up for a free trial of our research there. But remember, futures trading involves substantial risk of loss and is not suitable for all investors. Thanks a lot.